Shyam Metalics Energy boasts of being not a regular metals company. The company, which is Kolkata based and is now launching its IPO, essentially has three distinguishing factors. Firstly, it is integrated backward and forward. Secondly, it has very diversified product portfolio. And thirdly, most importantly, it also is almost debt-free or keeps its leverage to the bare minimum, in fact only limited to working capital. It has zero long-term debt. Now, we spoke to the management, the VC and MD of Shyam Metalics Energy, Brij Bhushan Agarwal, and he says, first up on the cost bit. Yes, the company does not have any captive mines, so to speak, but Mr. Agarwal says that in the last 1 year, the mines that have been put up for auction have actually been more expensive than purchasing the minerals from the miners themselves. In fact, the market price of those minerals have been lower than if Shyam Metalics would have a captive mine and then would mine the minerals from that. So that, according to Mr. Agarwal, has played to the company's advantage. The biggest cost, according to him, especially when it comes to the ferro alloy segment, which is of course a big contributor to Shyam Metalics product portfolio and sales, is the power business. In fact, Mr. Agarwal says that to produce 1 ton of ferro alloys, the plant, the facility requires 4,000 units of power. But the fact that Shyam Metalics has its own captive power plant eliminates a big chunk of the cost that other companies could be incurring to produce 1 ton of ferro alloys. In fact, almost 80 to 90% of the power required to produce ferro alloys is produced by the captive power plant. So on the cost side, they, according to Mr. Agarwal, have a huge advantage. And at the end of the day, when you are a commodity player, that's really where you can get an edge over your competitors. Moving on, of course, is the wide range of products that Shyam Metalics offers. Mr. Agarwal says that comes, plays to their advantage, because even if one particular segment is slowing down, they have the other products which will sort of counterbalance slowdowns and will help them make up for any sort of lost revenues if one particular sector does tend to slow down on their orders and on their demand. And also the competition, because of that, is very, very wide. So it ranges from a Maithan Alloys to even a Tata Steel. And finally, of course, leverage. Almost all metal companies in India do tend to have high debt, because you do need debt, to expand your operations, to get your operations running, etc. Shyam Metalics, though, has ensured that they keep debt to the bare minimum. In fact, they say that they have zero long-term debt on their books, and the only debt that is on their books is working capital. Furthermore, they do go on to say that, they will ensure that they will keep this strategy of low debt going forward as well.